Adrian Foster is Rabobank's Asia Head of Financial Markets Research. He joins us now. Great to have you on the program, Adrian. So what do you make of the way markets are starting the week off here in the red?
Yeah, a little bit of, I guess, cold comfort from what came out of Europe late last week. Of course, there was the euphoria of Thursday, and I think that was really just driven by the broad-based agreement that was presented, even though the details were of course, sorely lacking. But a bit of a wake-up call or a reminder on Friday, of course, with the Italian bond auction, that when the cameras are turned off and the photo op is passed for the politicians at that EU Leader Summit, there's still some very, very tough decisions need to be made. Italy's public finances, with 10-year yields above 6%, as we saw at the auction on Friday, that creates its own negative dynamic for Italy. And over time, as Italy refinances its existing stock of debt at these higher yields, it's going to really keep the pressure on the leadership there to tighten up the budget accounts to avoid really, I guess, an unpleasant situation where if yields did stay around this level for a long time. So I think in the cold light of day, we've come back in over the weekend, and investors more in tune with the idea that this is very much an ongoing challenge in Europe rather than a conclusion put together on Thursday.
So was that it? Was that the bounce from the rescue deals? The rally finished now?
I wouldn't say the rallies. Of course, there's a lot of different things at work here, and if you just look at the broader economic picture, I think there's some positives coming through there. We're not particularly bearish on that front. US jobs report, of course, coming out this week, likely to show that jobs growth continues at about the average rate of the last 4 months. So it's not impressive, but relative to the downside concerns that a lot of investors have had over the last couple of months, of course, with equity market weakness that we've seen since late July, I think a jobs number online with consensus about that 95,000, it tells us that the financial market ructions have not made much of a print on the US real economy, and I think that's an underlying positive. In China, the PMIs come out tomorrow. The manufacturing sector could well be the highest in 5 months, a sign that China's just picking up perhaps a little bit of momentum rather than losing it. So I think there's a few positives out there, but I do think when you look at Europe, it's very unlikely that we'll ever, well, I think for 2012 at least, I don't think we'll ever see a day when a conclusive policy platform is put on the table which solves the issue once and for all. It's very much going to be a slow, drawn-out process.
How significant would a pledge from Beijing or from the BRICS or from Japan to buy a significant amount of debt or to invest in this EFSF be? Would that be a huge boost to the markets, and is that likely?
It would be a great boost, I would think. There's, of course, a lot of money that can be put to work on some of these sovereign accounts, and, of course, China stands out amongst them. Is it likely? I think it's unlikely. Of course, we all know the relative income standards of these countries. China in the, 4 to 5,000 US dollars per capita at market exchange rates. Greece at about 28,000. So the idea that China or Brazil or anyone will be giving any charity to these countries, I think it's very hard to sort of further that argument. That's very unlikely. I think where Europe is now, it's almost binary in this regard. When they come up with a comprehensive package, or indeed if they come up with a comprehensive package, which really solves market concerns over the Eurozone, in fact they'll have an embarrassment of riches of people lining up to buy their bonds, because there's a lot of money looking for a good home. And of course with US Treasury yields down around the 2.3% mark, decent yield is very much in demand. But I think there's really got to be we won't be finding that, I think, in the near term. That's more for a 1 year hence, I would think.
Adrian, I just want to ask you about Asian earnings that we've heard from companies out there. They haven't been as positive. They haven't beaten estimates as much as we've seen perhaps from U.S. companies.
I think perhaps, over the last 6 to 7 months or so, as Europe's tensions have really escalated, and of course we've seen these downside risks through that time frame in the US. I do think perhaps the investors or the market in general became perhaps a bit complacent with the idea of Asia outperformance. Of course, Asia recovered very quickly from the global financial crisis, had a very good 2009, 2010. But when you think about the sort of culmination of weaker demand in the US, weaker demand in Eurozone, it must start to bite, because there is still a heavy reliance on developed markets for exports. So whereas if we look back and perhaps think of Asia ex-China as trend growth about the 5.5% rate, I think it makes sense to incorporate about a 4.5% rate in your sort of thinking about the dynamism of the region. So yes, outperformance, but perhaps at a little bit of a lesser rate than we've seen historically.
Very, very quickly, Adrian, what's the RBA of Australia going to do tomorrow?
I must admit I've got split opinions on this. I think you know, the global economy is actually turning out a little bit better than perhaps downside risks of the last couple of months have suggested. However, when you just read the signals, and there was mentioned last week about the inflationary print and might open the door, and then of course we saw a low inflation. So I'm going to switch my call of the last week or so, and I think they cut by 25 basis points.
All right. Thank you so much for your insights there. Adrian Foster, head of
Lindsay.
Rabobank's Asia, head of financial markets research. That RBA rates decision due at 3:30 tomorrow morning London time. We're going to be bringing you those numbers as they break.